Okay, so we need to talk about what's going on with the market right now, because frankly, it's sending two completely different signals. On one hand, you have this historic AI-driven tech boom. It's incredible. But on the other hand, the Federal Reserve seems to be hitting the brakes. It's a real tug of war between hype and reality, and we're going to try to figure out which side is pulling harder.
So let's just start with the number that has everyone talking. The S&P 500. It's up a massive 17% so far this year. I mean, that's not just a good year, that's a fantastic year. It could actually cap off one of the best 3-year runs we've seen in a long time. So on the surface, you'd think the bulls are completely in charge. But as you're about to see, that is only half the story.
And this right here, this is the big puzzle we need to solve. How can the stock market be absolutely soaring while the people in charge of the actual economy, the Fed, are flashing these big warning signs? You know, understanding this contradiction is really the key to figuring out what could happen next.
All right, let's dive into the bull case first, and I gotta tell you, it is incredibly powerful. And it really all boils down to 2 letters: AI. What we're seeing right now is something people are calling a hyperbuild. It's an infrastructure spending spree that is literally reshaping our economy in real time. To really get a sense of the scale here, just look at this number. Big tech companies are on pace to spend a mind-boggling $260 billion on capital expenditures in 2025. Just in 2025. That is $250 billion being pumped into building the foundation for this AI revolution. We're talking data centers, servers, all the hardware that makes this stuff run. So who's at the absolute dead center of all this spending? Well, it's Nvidia. The company has blown past a $5 trillion market cap. Let that sink in. It's now the most valuable company on the entire planet. And why? Because it's the main beneficiary of this hyperbuild. It sells the one thing everybody needs, the GPUs.
And look, this isn't just speculative hype. This is all backed by real, hard orders from customers. This number, $700 billion, that represents Nvidia's cumulative sales visibility all the way through 2026. I mean, think about that for a second. Companies have already placed so many orders for their new chips that Nvidia has a crystal clear view of its revenue for the next couple of years. It's just wild.
And it's not just about building the infrastructure, right? People are actually using it, and at a breakneck pace, faster than we adopted the PC or even the internet. The number of businesses planning to use AI has more than doubled in just 2 years. And then you have OpenAI, the company that gave us ChatGPT, maybe heading for a $1.5 trillion IPO. The software side is about to have its own massive moment, which, guess what? It's going to require even more of Nvidia's hardware.
And just to give you a sense of the excitement in the space, listen to how analysts are talking about these companies. The firm Wedbush recently called Palantir, an enterprise AI software company, the Messi of AI. It's just a perfect way to describe that feeling of, generational talent and game-changing potential that everyone's seeing.
Okay, but now we have to flip the coin, because for every bull argument, there's always a bear case. And behind all this AI frenzy, there's a pretty big wall of worry being built, brick by brick, from some very, very real economic problems. And it all starts with the Federal Reserve. So they recently cut interest rates, which on any normal day would be fantastic news for the market. But the message they sent along with the cut was, well, it was surprisingly stern. They basically said, hey, we're cutting now, but don't you dare get used to it. And that kind of mixed signal has left a lot of investors feeling really uncertain.
So why is the Fed being so cautious? Well, there are a few big reasons. First, core inflation is just stuck at 3%, which is a full percentage point higher than their 2% target. Second, the labor market, which was red hot for so long, is finally starting to show some signs of weakness. And to top it all off, there's a government shutdown going on, which means the Fed is flying a little blind here. They don't have all the data they need to make these massive decisions. These are some pretty serious cracks in the economic foundation.
So you're an investor. What in the world do you do with all this information? How do you even begin to navigate a market that's being pulled in 2 totally different directions? Let's break down a few of the key companies that are right at the center of this whole thing.
First up, of course, is the undisputed king of the AI boom, Nvidia. As we've said, they are basically the arms dealer for this entire revolution. If you are a bull on this AI hyperbuild, this is probably where you start. They make the picks and shovels for this modern-day gold rush.
So on the bull side, you've got their absolute market dominance and that incredible revenue visibility we just talked about. They also have this really powerful software platform called CUDA, which creates this deep, protective moat around their business. Basically, it's how developers code for their chips, and it makes it really hard and expensive for them to switch to a competitor. But man, the risks are huge. A $5 trillion valuation means you have to be perfect. And they're facing serious threats from US-China trade tensions, not to mention their biggest customers who are trying to build their own custom chips.
Okay, next up is Microsoft. You can think of them as the more balanced, maybe more diversified AI powerhouse. They give you a way to invest in this trend across the board. You get cloud computing with Azure, you get enterprise software with their AI Copilot, and of course, you get that critical partnership with OpenAI. Their Azure cloud business is growing at a blistering 33%, mostly because of AI services. They already have over 70,000 Azure AI customers. So that's the good news. The risks? Well, that massive spending on infrastructure we talked about, that's a huge drain on their profits. Their success is also really closely tied to OpenAI's success, which adds a layer of dependency. And at the end of the day, the stock is just plain expensive, trading at a pretty hefty premium.
And our third example is Palantir, which is a much more specialized AI software company. These guys made their name doing really complex data analysis for government and intelligence agencies. And now they're taking that technology, which has been battle-tested, and selling it to big corporations.
So the bull case here is that their platform is pretty unique, and it's got some serious momentum as they push more into the commercial sector. The big risk? It's that valuation. The stock has had an absolutely massive run, and it is very, very expensive. Plus, they still rely a lot on government contracts, and they're facing some really stiff competition from the big software giants.
So, where does all this leave us for the rest of the year? Look, nobody has a crystal ball, but what we can do is think about the future in terms of probabilities. Let's just quickly walk through 3 potential ways this whole thing could play out.
This gives us a pretty useful way to think about what might be coming. The most likely scenario, at about a 40% probability, is what you might call a Goldilocks outcome. The AI boom keeps going, and the economy cools down just enough. Not too hot, not too cold. But there's also a pretty significant 35% chance we see a major spike in volatility, and a 25% chance of a full-blown recession warning. So yeah, the risks are very real.
And each of these paths suggests a totally different strategy, right? If we get that Goldilocks scenario, you probably just stay invested. If we see a big spike in volatility, maybe you raise some cash so you can buy good companies when they get cheaper. And if those recession warnings start flashing, well, the smart move is probably to de-risk in a big way and wait for the storm to pass.
Which of course brings us all the way back to our central question. The market is caught in this massive tug-of-war between two huge forces, the seemingly unstoppable momentum of the AI revolution and the undeniable pull of economic gravity. Which one is going to win out and define the next year? That really is the $5 trillion question.